Bootcamp day 2. Now, the first video that I made probably wasn't the hardest thing, and you probably didn't learn too much on that video. But that was just a start. That was getting your mindset right and prepared for every single bootcamp that's about to come up. And make sure you guys got your notepads, because this is going to be a nice video about charting and just the candlesticks itself. Now, the way that I trade is exactly like how you guys see. There is no indicators, there's no VWAP, there's no nothing. Why? Because they're all lagging. The way I trade, I want to make sure I can see price right now, real time, the buyers and the sellers instantly. And in day 4, you guys are going to be able to see exactly how I could find the buyers and sellers real time. But we could also see that in the candlesticks and how exactly it got there when I'm about to take the trade. And this is the most important thing when it comes to trading, is what the candles are doing, because that also tells us a story. And right before I'm about to take a trade, how price got there in the first place. That helps me avoid fake outs, helps me get that A+ setups, and actually helps me to get a higher probability when it comes to actually trading. Now, the first things first, literally this is all hindsight, but it's not. It might look like it, but this is literally today's trading, and it's not hindsight because I didn't take this trade because I didn't want to get faked out. We have to understand why I didn't take this 258 to the upside to not get faked out, right? And these are not hindsight. I don't want to be that person that goes back on the charts and goes back to 1958 and sees, this did this and this did this, and if I bought calls here, it went like that. No, I want to talk about the trades that I took today or didn't take, and that should help you guys figure out how to actually properly think about the trade before it gets there, and think about actually executing and stuff like that. And you guys will know what I'm talking about in a second. But first things first is this 258 level to the upside is something that I was looking at. Why? Because it reacted. I like to see reactions. Why do I like to see reactions? Because that's where price stopped and then came in an opposite direction. For example, this thing came up and then stopped. Why did it stop? Well, it depends on what this key level is looking like. This thing moved all the way back down $2, which is nothing crazy, but look at how it reacted there. We got to see these reactions. It came up to 258, stopped exactly there at 258 is the high, and then absolutely dumped $2 in one single candle. So there's obviously a reaction there. There's something there that stopped the moving train. Think of a train. It stopped the moving train and then went back in the opposite direction. So there's obviously something there. Now, if it reacted like this, there might be something a little bit there, but it didn't have that significant of a reaction at a psychological level like it did at 258. Now I'm interested in 258. But we just told the story as to why I'm looking at the 258. Just off of that alone, I could be looking at 258. Even if no prior price action was really reacting. Now, 257 was looking amazing. Why? Because we had all of these reactions in this area. If price comes up and stops, comes up, stops, comes back down, stops again, there's obviously something there. So what do you think is going to happen when it breaks out? 9 out of 10 times, once it breaks above that key level of 257, because of those reactions, we fly. And it did. It flied $1. But we missed it because it was the first 1 minute. And I don't like to trade the first 1 minute. Why? Because it's way too volatile for me. It can come up as easily as it can come right back down. So I don't want to mess with that. But we wait for something clearer like this. Came down, bouncing off this 256, comes right back up. The reason why we don't take this 258 is because, look at this, ready? We came from low a day to high a day, just like that. Now, sometimes I'll take that, but if you guys could see, we came up, we start struggling right here. Automatic red flag in my mind. We start struggling here, right? We start struggling in that area. One red flag right there. That doesn't mean I'm not going to take it. It's just like your ex, right? You have one red flag. That doesn't mean you stop, right? You wait a second, gather your red flags. We have this one red flag. Next thing you know, we start coming up a little bit. And this is an aggressive 258 candle. This is an aggressive 940 candle. This aggressive move right to that 258 could have saved this and turned that red flag into a green flag. The problem is it's not confident, right? You can see this area, there's a lot of reactions there. Comes up, not confident there. And then out of nowhere, it pops like that. The best case scenario for this trade would have been this, right? If instead the level was 258.20s, we react there, and then we have a candle come up. So for this instance, let's correct this bar real quick so you guys can see exactly what I'm talking about. We have this one red candle right there, which means that we see a reaction there. After that nice move up from lower day, we have a pullback right there because it was already not confident. I really want to see a red candle, a reaction at that 258. But let's pretend now, if this was a perfect trade, 258.2 was going to be our key level. We wait for the pullback and then continuation if the momentum's there. I can't take it off like that just because we already start seeing some sign of weakness, but then it came back. I really want to see a reaction because 9 out of 10 times if it looks like that, because I trade Monday through Friday, so like you kind of see a thing or two. Every time it does that, 8 to 9 out of 10 times, it's going to just fake you out. But what would happen if it pulled back like that and our level was 258.20? So now our open was that. Let's say our high was around 258.60, right? And this is literally just to show you what exactly I would look for. That's the reaction. And this is exactly what would happen after that. The low of this, we could say, is around the, let's say 60s, just because we like seeing that double right there. And then the close, let's say 258.55, right? Now we apply that, and you guys can see that's exactly what I'm looking for. This is the reaction that I'm looking for, and then a nice move up. Bouncing off that right there, showing that sellers cannot bring it down more than they brought it down the last candle. And then this flips red to green, goes in at 258.20, and then goes that close like that, shows that there's still momentum there, right? There's still momentum in that area because of how it closed, and if you can see the time of sales, but we'll go over that in bootcamp day 4. And then the next candle will look something like this, where the low is going to be right around a little bit halfway. So let's say the 40s right there. So the low is going to be 258.40s, and then the close is going to be like 259. We finally get that 259.50s break. That's a little crazy. Let's do 15. And then the high is 259.15. It's going to be a full candle. The open is going to be 258.55. Right? And then it's going to look something like this. A little pullback right near that opening where we got the breakout, and then a nice push like that. Boom. Then I'm done. I saw that 259 area. I'm looking for $1, $1.50, depending on what price action is doing. But the fact that it was choppy like that, a little slow like this, I'm probably going to take it off that first dollar unless momentum is really showing that it's going to continue. But that's exactly what I'm looking for. But instead, what happened? The 258 was right here. We see the wicks right there. We see that candle looks disgusting, and I don't like it like that at all. I'd rather it react how I just showed you guys, where it was like that and it reacts right at that 258. But instead, it did it at the 20s. It's just still okay, but it just didn't look that great. Now, if we take a look at NVIDIA, and let's actually go back to the trade that I took 2 days ago on Wednesday. Now, obviously not that, but we took this off open around 2 minutes after market open at around 9:47. That breakout right there on the video. Now, this is exactly what I was just talking about, right? If we go back, 9:57 reaction. Now, that reaction right there was not the only reason why I got in at 9:47. You guys can see, this is what I'm talking about, these reactions. What happened at 9:47? You guys can see we came up aggressively and stopped. The high was exactly 497. Then we came down about $4, and then we came all the way back down to low day. This was the high before we absolutely died, right? And I've probably been saying 947 this whole time. I mean 497. That's the reaction I like to see. Now, let's see another reaction. We come up aggressively. Now, if it broke like this, I'm not getting in. If this candle wasn't here, right? If this candle wasn't here, I would not be able to get in that. I would just miss it. And I'd be okay missing it because I stuck to my rules, because 9 out of 10 times that would not follow through like that. An aggressive move like this, especially when the candle is this small, right? If the candle is this small, that means momentum's starting to slow down. Even without time of sales, like, you could just see that. And I want to see a reaction close to 947 or like right around that area. And I want to see a red candle, and then I might be able to anticipate it once it breaks this high of 496.50s. But let's go back and get back to this candle right here. So remove that. Now, you guys can see what exactly happened. It reacted around that 947, which was so perfect. The high of this, literally 496.92, which is 8 cents away from the 497. Perfect reaction. That's exactly what I like to see. Then this opens up, comes down, retests it, doesn't get below this low, which means that buyers are there and sellers are not allowing this thing to dump below the previous candle, which means that sellers are not as strong, and the buyers were able to literally turn these sellers around, turn it from red to green. That's what I like to see. Next thing you know, momentum's coming in crazy. We're flying. There's the breakout. Boom. That's exactly what I like to see at 947. And then next thing you know, we open up, retest is 947, red to green, absolutely flies at 499. That's when I sold. And like I said, I like to see that dollar move, but this was a $2 move. Why? Because at 498, when this went red to green, we're right at that 498. If it's going red to green right at that 498, that's a whole nother play in itself. And I'm thinking in my head, if I did not get into anything yet, would I enter calls there? Yeah. So why sell right there when it breaks? Give it a second. It breaks this 498, and then we absolutely fly. Momentum's following through. Once 499 broke, I sold. This thing was flying. And the only problem is we're getting close to that 500 level, and you got to think about it. That 500 level is a significant level, like 300, 400, 500, 100. So I was like, I am not risking my profits, because if this thing hits 500 and absolutely dies, I don't want to risk it. I'll take this, and then I'll wait for 500 to set up again, and then that's when I'll take it. And that's exactly what I did, except I didn't take another trade after that because 500 did not break just yet. And then if we go to the NVIDIA the day before that, when I took my downside trade, as you guys can see, you guys could probably tell where I got into my puts at, right around this 492, 491 area. Why? Because of the reactions in that area. It was looking great. And this is exactly what I like to see. Let's see how the candles were reacting in that area. Well, first of all, this candle was crazy, and it sucks because it kind of made 492 a little weird, but it's right off open, so I have to see another reaction. We came up, rejected at 497, as I said, then we came back down, then we had that reaction right at that 492. You guys can see sellers try to come down aggressively, and it stopped. Why did it stop? Because 492, there's buyers in that area. That's the whole reason why we're trying to trade a breakout. We come back up, and then we come back down. This is looking great. People, pull back, continuation. That's what I want to see. Sellers are coming in. You guys can see, a medium candle, small candle, and then aggressively pushes. And then next candle, again, aggressively pushes. I wanted to make sure that wasn't fake momentum. Then when 492 broke and momentum was still there, that's when we get in. And then I got fully in right around there. Pull back to 492. If it went any more than that, then you're getting stopped out. Why? Because the reason why we broke this was because sellers were able to push it under that 492. Not enough buyers in that area. Next thing you know, we're bouncing off this 490.5. Comes back up, but we're still under that 492 because sellers are keeping it under there and no one wants to buy it above that 492 in that area. Next thing you know, we come right back down, and that's exactly what I like to see. Now I'm waiting for this 492 break. Again, I see this a lot. This wick right here, your chances and your probability definitely increase in getting faked out at this 490 area, just because 490 was a significant key level. But I knew that it was a significant key level, and I wanted to see what exactly was going to happen. My stop loss was going to be right above that 491. Why? Because it's right around halfway of that candle. If we take a look at this, halfway of this candle is right around here. And it's not always exact, but how I think about it, it's if sellers are able to bring this more than halfway or below halfway, that kind of helps to judge me based on how strong these buyers and sellers are, even without looking at the time of sales. This, I always see this. If it goes halfway, then it's a perfect reaction because it'll come up, go about halfway to this candle, and then come right back down. I always see that repeatedly. Same thing here. You see how this came halfway in that candle and then came right back up. I always see that for some sort of pullback, and that's how I can gauge if it's more than a pullback or this is just a regular pullback, as well as help with the time of sales. But just straight off the candle, you can just see that. Now, it came up a little bit less than halfway, which is even better. Green to red, and you could also see how slow that momentum was. coming up versus coming back down, and then it went green to red. Absolutely died once 490 broke. That's when I sold, because we already saw that there's buyers there that's not allowing it to break that 490 just like that. And then next thing you know, this wick right here, if you weren't fully out already, I'm fully out, because we already see the signs that it's starting to get a little bit strong here with buyers. And then you see this thing right there, back to back red flags, especially after a huge move like this. Yeah, we had a pullback, but then it's trying to have another pullback right after we had a pullback, which means that it's not as strong to the downside as it once was. Next thing you know, we're coming right back up. Absolute bounce. That's exactly, you know, the warning signs were here. The red flags are here. If you didn't dump her already, it's too late. You're about to get married to her and about to pay child support. Next thing you know, you absolutely die on those contracts if you're still in puts. And that's exactly why I sold at 490. But those are just examples of that. I'm going to also supplement this with a time and sales lesson. Bootcamp day 4. If this gets enough likes, let's get this to around 100 likes. I know it's the holidays, but it's pretty easy for you guys, to be honest. So bootcamp day 3 coming out tomorrow, and I'll see you guys then.